Good morning. Welcome to the Mint on ZTN. I'm Blessing. Having in studio our business reporter Ndakama Jaka to discuss the new Zim Papers board that has just been appointed this month. That's coming up in the Mint. Thank you so much for joining. This is the Mint on ZTN. And now we start, of course, by looking at the markets. 0.75%, that's 1.26 points. Industrial also down 4%. The mining index trading unchanged after slight movements on Wednesday. Delta, Old Mutual, OK, Zimbabwe and Padenga were the top value drivers of the day with a combined contribution of 89.65% to the outturn. Elsewhere, FBC reported a turnover of 54.31 million for its half-year 2019 results, which was 266% higher than the previous comparable period, and proposed an interim dividend of just over 2 cents. Dairy Board also released half-year 2019 results in which the group reported a turnover of 3.79 million. Top gainers, CZL going up 1.25, also Mashonaland and FCA. The deregulation of the petrol price in South Africa, we will also be looking at that. Now, the top losers, also Power Speed, OK Zimbabwe, Eternal, Simbisa Brand further slipping down, and Eggs Corporation also going down in yesterday's performances. Also coming up on the Zimbabwe Stock Exchange, we will be looking at Border Timbers, the EGM. Later on, and we will be looking to see how Padenga is actually looking at going into mining. That's on the Mint next week. Do not miss that edition. Let's look at down south in South Africa. The Johannesburg Stock Exchange analysts anticipating that the JSE All-Share Top 10 will open higher this morning on the back of possible renewed US-China trade relations improving. Now, retailers have been clobbered since their 2018 financial results, and an estimated 153 billion rands wiped off their market capitalization since 2018. And reports are coming out that resources have been leading the gains on the JSE, and BHP and Anglo contributing to gains in the resources market. Looking at the deregulation of the petrol price may not have been leading to cheaper fuel prices in South Africa, just more volatile ones, according to analysts. The National Treasury, in a discussion document released on Tuesday afternoon, proposed the deregulation of the country's fuel price as one of the many measures proposed to stimulate economic growth. And the Treasury wants regulation of the petrol price to be reviewed, particularly in terms of spot price benchmarks, and where regulation has purposefully supported incumbents such as Sasol. Now, the basic fuel price is currently calculated on a monthly basis based on the oil price and costs associated with shipping petroleum products to South Africa from the Gulf states and Singapore. Now, this means that the companies such as Sasol are paid a price for its fuel equal to how much its imported fuel cost, even though Sasol manufactures that fuel locally. The predominant method that Sasol manufactures petrol is by refining the oil importers import from places such as the Middle East and Asia. Now, Sasol and other oil importers will, however, benefit by deregulation, as they'll be able to immediately adjust their prices when the oil prices change. Now, currently prices are fixed a month, and if the petrol price is deregulated, the prices will react to oil price movements much quicker. Now, do you think that deregulation is an option for Zimbabwe, especially given the speculative nature of our environment? Out don't know. Give us your thoughts on our Facebook. That's at Zim Papers TV Network. Also on Twitter at ZTN News and our Facebook ztn.co.zw. Now, stocks jumped on Thursday after China said it wished to resolve its protracted trade dispute with the world's largest economy with a calm attitude. Now, the Dow Jones Industrial Average traded 300 points higher. That was 1.2%, and the S&P 500 gaining 1.2%, while the Nasdaq Composite advanced 1.4%. Now, when asked about its ongoing trade war with the U.S., China's Commerce Ministry says it was opposed to escalating trade tensions, hinting Chinese authorities will not retaliate against the latest round of U.S. tariffs. Now, trade bellwethers, Boeing and Caterpillar rose at least 1% each, while Deere traded 2.4% higher. Micron Technologies also gaining their 2%. Now, those are the trendsetters, obviously, in the United States market. And the U.S.-China trade war escalated earlier this month when China unveiled new levies on $75 billion worth of U.S. products. And President Donald Trump then announced that he will raise tariffs on a slew of Chinese goods starting in September. Now, investors have also loaded up on traditional safer assets such as gold and silver this month, obviously looking for a safer haven, as you will see when we look at the metals later on in the segment. In economic news, second quarter United States GDP growth was revised downwards to 2% from 2.1%. The revision was in line with analyst expectations, and pending home sales for July during afternoon trade. Basic resources adding 2% of all sectors, and major bourses traded comfortably. And tariffs on one another's goods. Now, soft providing an additional boost to target of almost 2%, with markets expecting policy easing at the central bank's meeting on September the 12th. Now, Eurozone August consumer inflation expectations came in at 20.7 versus 20.6 in July, and data from the 6 German states indicated on Thursday that overall German inflation likely slowed in August from the prior month, sliding further below the ECB's target. Germany always will remain relevant, being Europe's largest economy and also fourth globally if we're talking in terms of nominal GDP. Let's take a look at the Asian markets. Now, stocks in major Asian markets were mixed on Thursday as investors continued to watch the yield curve in U.S. Treasuries. Mainland Chinese shares dipped on the day, with the Shanghai Composite slipping 0.1% and the Shenzhen Component also down 0.17%. The Shenzhen Composite was 0.172 lower at around 1,591, and Hong Kong's Hang Seng Index under South Korea's conglomerate. Samsung dropped on Thursday after the country's Supreme Court overturned part of an appeals court ruling in a bribery case involving the group's de facto chief, Jae Yi-ling. Samsung Electronics saw its stock dropping 1.7%, while Samsung CAT plunged 4.05%, and Samsung Biologics plummeted 4.89%. Now, the latest ruling raises questions over Lee's ability to lead Samsung Electronics as it faces failing profitability, issues and challenges surrounding a Japanese ban on the export of crucial materials for South Korea's technology sector. He was freed from detention in February 2018 after his original sentence of a 5-year imprisonment was halved and suspended for 4 years. Let's take a look at currencies, of course, starting with the African currencies graph. The United States dollar index, which tracks the greenback against a basket of its peers, was lost at 98.235 following lows below 98 seen earlier this week. And the Japanese yen traded 106.08 against the dollar after seeing lows around 106.2 yesterday. The Australian dollar changed hands at $0.6735 of highs above 0.676 touched earlier in the trading week. Now, the onshore Chinese yuan briefly weakened past 7.17 against the greenback for the first time in more than 11 and a half years on Thursday. And Reuters has given that report before making a recovery in the afternoon of Asian trading hours. It last traded at 7.1572. Now, the People's Bank of China had set the official midpoint reference for the yuan at 7.085 on Thursday morning. Meanwhile, offshore trading of the yuan was last at 7.1611 per dollar. The sterling edged 0.25% lower at $1.21, approaching a January 2017 low below 1.2015. Now, Boris Johnson, of course, approaching the Queen for suspension of Parliament, and that request was to actually sit down and deliberate on the Brexit issue. Let's take a look at the commodities in the market. Quite a weak decrease in the wheat there, going down 8 and almost 1.5%. Taking a look at the metals, gold steadied near a 6-year peak on Thursday, and silver rose to its highest in more than 2 years as fears of a global recession exacerbated by the protracted U.S.-China trade war, of course, drove interest for safe haven interests. And gold advance was limited by comments from China's Commerce Ministry, which said on Thursday that both sides should create conditions for progress in negotiations and that China was against the escalating trade war. Silver also rose 1.2% to $18.55 per ounce after hitting its highest since April 2017 at $18.64 earlier in the session. In other metals, platinum jumped 2.8% to $924.94, its highest since May 2018, and the palladium gaining 1% to $1,483 per ounce. Energy, looking at Brent oil, held above $60 a barrel on Thursday, withstanding pressure from concerns about economic growth, while a sharp fall in U.S. inventories boosted West Texas Intermediate WTI crude futures. International benchmark Brent crude was up 2 cents at $60.51 a barrel, and concerns about a slowdown in economic growth due to the trade war raging between the United States and China, the world's biggest oil consumers, along with the potential hit to oil demand, are keeping prices in check. So in the markets, suddenly we see that the metals are firming up, and that is becoming a safe haven for investors that are cautious with their investments. And also, a strong metal price is good for Zimbabwe in light of Zimbabwe's foreign currency earnings in the mining sector. Coming up shortly in the Mint, we will be looking at Dairy Board Zimbabwe Limited results, as well as the prospects of the new Zim Papers board. That's coming up in a moment. But of course, you can visit our website ztn.co.zw to get more on our content. And the 31st of August, we will be live streaming the Dream Star event. Visit our website ztn.co.zw to find out more information. Do stay tuned. Mint takes a short breather.
A great artist once stated, only shooting stars break the mold. But while the stars shoot at night, most of the artists sleep on their dreams. Instead of dreaming high and fighting harder, trust our dreams to stardom and let the stars gleam. Don't you think we might achieve the Zimbabwean dream? Well, fast forward, enough about the artists that trusted their dreams and let their passion pay off. Cause every day, another star was born. But will you be there to witness? Dreamstar Zimbabwe, Zimbabwe's best talent search competition is back. This 2019 on the 31st of August at HICC Rainbow Towers Harare from 6 p.m. till late. Come and watch as the final 17 contestants battle for the grand prize of 30,000 RTGS. For tickets, call us on 0775 775 775. Voting lines will be announced on our official Facebook page, Dreamstar Zimbabwe. Dreamstar, dream higher and fight harder. Proudly sponsored by the following.
Welcome back to The Mint, ZTN's premier business show where we talk business and we mean business. Can you talk of business without talking of investment? Now, Shanna Fisher, managing partner of Highline Venture Partners, spoke to a crowd of aspiring entrepreneurs at Y Combinator Startup School in New York City. And Fisher mentioned that she has often been told she gives founders surprising advice, which she outlined in her talk. Here's one piece of her advice. Don't focus on raising money for the short term. When people think about their startup runway, which is the amount of money they need to get their company off the ground, they tend to think about raising money that will last for several months. However, Fisher advises people to figure out how to get their money on the go. I want people raising money to make sure this thing happens by any means. We will be highlighting Fisher's advice to entrepreneurs in feature episodes. Now, earlier this month, the Zimbabwe newspapers group, Zim Papers, appointed a veteran journalist and aviation sports expert, Mr. Tommy Sitole, as the new board chairperson. He took over from Mr. Delma Lupepe, who left the Diversified Integrated Media Group after having joined as a board member in 2009 before assuming the chairmanship later in May 2015. The incoming chair previously served as editor in the Chronicle and the Herald, also was the chief of Zim Papers and business development director for the group. Now I am joined rather by Ndaka Majaka in studio. Ndaka, can you tell us the new Zim Papers board? Rather, let's start with the outgoing board. When they came in and when they left, how did they perform?
Well, the most commendable that the outgoing board did, and the most commendable thing that they did, is they managed to turn the group into an integrated media business. When they came in, the group didn't have a TV station, but right now we're talking of a TV station, Zimbabwe's television network, which is now awaiting licensing. So this was the biggest achievement by far. They also managed to turn some loss-making divisions into profit-making divisions, like the printing division. So it's quite commendable that they managed to do this.
And the group is obviously committed towards, recapitalizing and reinvigorating and repositioning its brands. Just looking at Natprint, it got 2 phases of investment for their, infrastructure, same as Typocrafters, that turned the commercial printing around. They also invested into a Bold Ads, which is doing well in becoming the creative hub. Now, when the board under Delma Lupepe, did take the decision to go the full circle, do you think that now they're realizing the dividends of going that route?
Indeed, they're realizing the dividends. Just look at the printing division, as I mentioned earlier. In the first 5 months of the year, the printing division managed to contribute 21% to the group's $23.5 million revenue. Mind you, this revenue was actually above an $18 million target initially. So this was quite big, because when the old board took over, the printing division was in a bit of a fix. So you also mentioned the issue around Bold Ads and other investments that the group has made. So it's quite commendable that they managed to do this.
Wonderful, wonderful. And for the first time in 20 years, we saw the group, declaring a dividend. Obviously, this is a significant step.
Indeed, it is a significant step, and at the group's AGM, the group's CEO, Mr. Pikrai Deketeke, mentioned that he hopes that the group would continue declaring dividend, but it is quite a starting point. We don't know what's going to happen in the future given the economic situation, but the group's share has been performing well, so we expect more dividends to come. It's
interesting that you mentioned the group's share, because I wanted to find out how is the market reacted to this new appointment.
Well, the market has been good. The share has enjoyed a fine run since the new board came into place. And year to date, it has risen about 178%. So it's quite commendable. It's had a fine run on the ZSE.
Thank you so much, Ndaka, for that insight into the new Zim Papers board, and we certainly wish them all the best.
Thank you for having me, Blessing.
Zim Papers surpassed its revenue and profitability targets for the first 5 months of the year, despite battling a significant exchange loss impacting results. Resulting, of course, from the change of functional currency earlier this year. Now, going forward, the group expects its television entity, that's the Zim Papers television network, to follow the path of its radio division and contributing significantly to both revenues and bottom line. Now, the group obviously is also committed towards, recapitalizing its business. If you look, 1.2 million in terms of capital expenditure just in 2016 has jumped up to 4.5 million in 2018, and also managing to reduce their liabilities by as much as 11.6% in 2017 alone. That's quite a huge step. And just like we were discussing with Ndaka, the Zim Papers share has been doing well, incrementally. Year-to-date performances 178% in the positive since the year started. Of course, investors will also be looking to see what changes the board will be bringing in, and the results also are imminent for the Zim Papers group. Let's move on to the listed milk processor Dairy Board Holdings Limited. Dairy Board Zimbabwe says it has fully exited from its Malawi unit, and the subsidiary posted a loss after tax of $700,000 in 2018, an increase of 17% on the prior year loss due to working capital constraints. And Malawi had continued to drag the group before a decision to cut it loose was made. In the group's first half of the year performance result, Dairy Board Chair Josephat Sachikonye says the disposal process for Dairy Board Malawi was now at an advanced stage, and an investor has been secured, and the parties are in the process of finalizing the deliverables in line with agreed terms. And the Dairy Board boss also adding that they will continue to look at their quality. The disposal process will be concluded by the end of August 2019, and earlier on, Dairy Board CEO Anthony Manduwanza said the group did not anticipate this development to affect group performance. Here's what he had to say.
The other key issue is the disposal of Dairy Board Malawi. We reported this extensively to the shareholders and to the market. And the compelling reasons why we had to exit, that has already been communicated. Where we are now is that the sales and purchase agreement is now at an advanced stage. They call it done. What we are now doing now is tasking. So it's almost a done deal. The disposal anticipated, the disposal process is not expected to impact negatively on the 2019 performance.
Now, Dairy Board obviously riding on a very strong product portfolio and a very strong distribution network, and EBITDA of 12%. Now, let's take a look at some of the talking points on the financial results. Raw milk intake continues to grow in response to the group's efforts to close the demand-supply gap for milk products in the country, as well as reducing dependence on imported milk powders for the period under review. Raw milk intake grew 22% ahead of the national average growth of 14%, and the business achieved a volume growth of 3% to 40.3 million litres, and the growth was constrained by worsening supply of inputs. And by portfolio, liquid milks and beverage volumes grew by 13% and 3% respectively, while food volumes declined by 26% compared to the same period last year. Revenue for the period was, however, $118 Zimbabwean million, a growth of 139% above 2018. This growth was on account of volume growth and gradual price adjustments to align with market conditions and cost push pressures. While revenue increased by 139%, total operating costs increased by 123%. Resultantly, an operating profit of 12.2 million Zimbabwean dollars was recorded compared to 0.9 million achieved in the prior year. Now, do take note, of course, that the functional and reporting currency did change along the way, and the changes that are adjustments being made in terms of those comparisons in line with SI 33 of 2019. Now, following the liberalization of exchange rates in 2019, the transition of foreign obligations to the Zimbabwean dollar, the business incurred foreign exchange losses of 5.9 million Zimbabwean dollars for the period under 30 June 2019. Now, after accounting for the foreign exchange losses and an interest bill of 0.3 million Zimbabwean dollars, the company posted a profit before tax of 6.1 million Zimbabwean dollars compared to 0.7 million Zimbabwean dollars achieved in the prior period. Definitely on the right path there, Zimbabwe's Dairy Board Zimbabwe Limited shedding off their Malawi investment. Now, let's go to Kenya, where the government of Kenya, through the Kenya National Highway Authority, KENHA, has stepped up their fund to upgrade the 26 kilometers James Gichuru Rironi Road after World Bank pulled out of the project. And now the World Bank cancelled a share of US 157 million for the project, citing delays. According to KENHA, the World Bank is no longer part of the project, but Treasury has stepped up and allocated 125 million US dollars to complete the project, which is a key link to the Nairobi-Nakuru Highway. Construction works on site are progressing slowly due to the need for additional funds to compensate investors who gave land for the project. The cancellation from World Bank comes as Kenya was seeking to negotiate for 96 million US dollars to cater for unplanned land costs. The World Bank, also under its policy, does not provide funds for land compensation and acquisition. Interesting development there, as the locals are ceding their land that was meant for development. Now, for all its many businesses, Berkshire Hathaway Incorporated can still swing on the insurance operations that built it. And the company's operating earnings fell in the second quarter as underwriting income at Berkshire's insurers dropped by almost 63% of $353 million, and Berkshire's reinsurance unit swung to a pre-tax loss in the period, while auto insurer Geico saw a jump in the average severity of its claims. Warren Buffett, let's take a look at what he has to say. He has fueled the growth of his conglomerate by investing the premiums earned by his insurance unit, and I say that's more than a fair trade-off for the occasional volatility those businesses bring. Still, that can mean grappling with a big drop or a loss, as happened in 2017 when a spate of hurricanes caused a spike in costs in Bloomberg reports. And overall, Berkshire's insurers have been a relatively steady force for the company, generating an annual underwriting profit for 15 of its past 15 years, according to the company's shareholder later this year. While the company's overall operating earnings dropped, net income jumped 17% because of 7.9 billion in investment gains, and those came largely from the company's $200 billion stock portfolio, which includes major stakes in Apple Incorporated and Bank of America Corporation. Berkshire sold $1 billion worth of stocks that it bought last year, its biggest net selling since the end of 2017, and Buffett was an active buyer of equities every quarter last year, including almost 13 billion in the third quarter alone. Let's take a look at another businessman, Jeff Bezos. Your brand is what other people say about you when you're not in the room. That's what he's known for saying. American entrepreneur Jeff Bezos, a founder of Amazon, is considered to be one of the most powerful CEOs in the world. He even overtook Bill Gates' spot as the richest person on the planet with a net worth of 170 billion US dollars. And Bezos, of course, has his own quirky ways of running his business. For example, at the start of Amazon meetings, Bezos likes to first read through all the memos with his employees, for new employees, and it's a strange initial experience. They're just not accustomed to sitting silently in a room and doing study hall with a bunch of executives. Now, did you know that Bezos never schedules any meetings in the mornings? And for that, the meetings, he implements a two-pizza rule, a rule in which Bezos wants the meetings to be small enough where 2 pizzas will feed everyone. Definitely hope that will be a large or mega pizza. That's it from me, Blessing Munatsi, today on The Mint. Keep your comments coming in on our Facebook page, Zim Papers TV Network, on Twitter at ZTN News, and our website, ztn.co.zw. We would like to hear from you. Do give us your comments. Remember, like I said, tomorrow, the 31st, we will be broadcasting live streaming of the Dream Star event. And also tonight, we will be live streaming Mbeu's album launch Don't miss our exciting lineup of shows. The Heartbeat, a show all about health issues right here on ZTN. The Couch, the only sports show that you should watch. And The Chase, Zimbabwe's top current affairs program. And up-to-minute news from our ZTN newsroom. ZTN.co.zw, that's our website. I will see you next week right here on The Mint. Have a good day.